Well, good afternoon. Good afternoon and welcome. Welcome to another of our Webinar Wednesdays. Good to be with you for the 8th consecutive Wednesday, a little program Webinar Wednesday that we started back in 2013. And we've been doing it ever since, not every Wednesday, but through the pandemic. And now I'm pleased to announce through the rest of May, we've decided to continue with you every Wednesday. If we need to have that stay home webinar series continue into June, which is possibly, and maybe likely we'll continue then. Well, I'm Kelly Bearden. I'm the director of the CSU Bakersfield Small Business Development Center. And at the Sbdc, we do a number of things that actually work with small businesses to help you. Right now, it seems like we're a little preoccupied with what's going on with a couple of things called the Payroll Protection Program, and then also a little thing called the EIDL program, the emergency loans. But other than that, we do a variety of other things at the Sbdc. We do a lot of different areas and disciplines, including marketing, social media, do some HR that we're going to get into a little bit today, a lot of cash flow, a lot of financial stuff, a lot of different areas, even risk management to help small businesses grow. So we're going to talk a lot about what's been going on with a lot of the programs today, and we have a special guest that'll be with us later on. And a little more about the Sbdc program. We're part of the Central California region. Central California region is hosted by UC Merced and consists of 6 centers. We're the center located at the far south in Kern County in Bakersfield. And we are hosted by California State University, Bakersfield, and serve all of Kern, Inyo, and Mono counties. We also have centers in the Fresno area, Merced, Modesto, Salinas, and San Luis Obispo to meet the needs of small businesses that you might have. You might have came to us right now for EIDL and PPP, but as you start to reopen your businesses, there's plenty of opportunity to work with your consultants, those that are working with Sbdc consultants, and continue that relationship. You might even have more accessibility to them because the deluge has kind of slowed down a little bit with so many people getting the PPP and EIDL loans. So a lot of ways to sign up free of charge, as most of you know. And let's roll into a little bit of our polls that we have for you today. We'll explain a few things as we go along the way. The first question I want to ask you is, if you applied for EIDL, what is your current status? And so I'm going to launch that poll right now. Yes, I've received or have heard I'm going to receive the EIDL advance. Yes, on the EIDL loan. No, I have not heard and applied before 3/30. And no, I have not heard and applied after 3/30. So this is mostly for those that have applied for the economic injury disaster loan. So jump in and let's see exactly where we end up with this. We're up to about 35% of you have voted. So continue to get those votes in. We'll give you another couple of seconds. And then what we'll do is we'll end the poll, we'll share the results. We're about at 45% voted right now. So let's pull the plug and share the results. And what we see is that it's a dead tie between, yes, I have already received at 36%, and no, I applied after 3/30 and have not heard. So that's roughly pretty close to 3/4 of you that have either heard or received in an equal amount that has not heard and applied after March 30th, which is kind of the golden date, as we know in EIDL, from when the new platform opened up. So we'll get into that a little bit later. We'll spend a little bit, maybe a little bit more time on, if you haven't heard, maybe some of the reasons why. And let's move on to our second poll question, which is going to be related to the PPP. And it's going to be on your biggest PPP concern, the Payroll Protection Program. What is your biggest concern? Is it not getting a PPP? You want to get a PPP, you've applied, or you're looking to apply, but you have not got it yet. The second selection is you're getting it, but maybe not able to open your business. Next choice is getting it and not knowing about debt forgiveness, which has been a kind of a big topic for us, and getting it and my employee is not coming back. Maybe it's unemployment, maybe it's some other reason, but your guests are not coming back, or your employees. Hopefully your guest and your customers come back. So we're at about 56%. Going to end this poll in just about 2 more seconds and share the results with you. Here we go. And debt forgiveness is the big one, 58%. We also have 18 of you, or 22%, that are still looking at potentially not getting your PPP yet. And maybe we can discuss some of the issues around that as far as a bank. So thank you for sharing that. Not getting your employees back and unemployment insurance. There's kind of a unique FAQ that popped up that we're going to go into about the PPP and unemployment. So whereas our final rules are not out yet on debt forgiveness for this particular loan, we are starting to learn more and more. And so I'm going to stop sharing this poll. And then I'm going to go into our bonus poll question. Yes, we have a bonus poll question today. And this one is going to be your Chevron gas card question. Trying to make it a little bit easier on me, So I'm going to ask a very, I know these bonus questions have been a little more difficult in the past, but this one maybe is easier, maybe it's not. So let's talk about business failure. What is the main reason most small businesses fail? And you don't have to be first in this. It's going to be a random selection of 10 correct answers who win the $100 gift card. So you do not have to be the first one in. So take your time on this poll. What is the main reason most small businesses fail? Poor management, not spending enough on marketing, they run out of cash, bad HR decisions, or the owner is a jerk. And you're voting it up pretty good right now. One of those categories is running at about 50%. Really, it's really close on 2 of the topics. And with about 70% of you, boy, you throw out $1,000 worth of Chevron gift cards and look at that. I get a 73% voter turnout. Maybe, our politicians and our voting might learn something there, huh? So 77% of you are in. I'm going to end the poll right now, share the results with you, and by a slim, at the end, poor management has taken the lead, 47%. Over, they run out of cash and not spending enough on marketing, bad HR decisions, and I like that. 2 of you, the owner is a jerk. I do like that. So a little drink of water and a pause for effect. And the actual answer I am looking for, as I share the results with you right there, the right answer I'm looking for is they run out of cash. Now, poor management is oftentimes the main reason that they run out of cash. But as you have heard me say on many, many, many occasions, how important cash is king and how important cash flow is. And some businesses do fail because they don't spend enough on marketing. And they make bad HR decisions. And it's true, some businesses fail because the owner is a jerk. But the answer I'm looking for is they run out of cash. So 45 of you had the correct answer. What I'll do is I will actually, with this, I will randomly select every third person that comes randomly on the printout from Zoom on this particular poll. So first one, skip 2, next one, skip 2, until we have 10 winners. So very randomly selected, but a little bit easier for me to administer. So potentially good luck, those of you that got it right, and hang tight. We'll let you know next week if you're a winner. So what's new today? Today is May 6th, and we've tried to start with a light feature every week about what is new. And one thing that's new today is the great Willie Mays turns 89. Willie Mays, as described by legendary Hall of Fame announcer Vin Scully, who described Willie Mays as the greatest baseball player he ever seen in his lifetime, and announcing for 67 years and being over 90, I think Vin would know. So I'm with Vin on that. Greatest baseball player I've ever seen. And that's for you out there that actually miss baseball like I do. So also, I found out we have a couple of other birthdays. And so we might as well make this the birthday show, at least on May 6th. And also, Alicia Bravo, who is actually the daughter of our guest speaker today. Jennifer Bravo, who I'll introduce properly later, is turning sweet 16. And if we hear some nice honking and celebration going on, apparently she's going to have a drive-by birthday party of some kind sometime today when everybody comes by. And normally interruptions aren't my best friend during a webinar, but I will gladly take this one as a chance to go to somebody's birthday party. Lastly, we have Ashley Olson, the baker in Food Fix Baker and Butcher, who turns 33 today. So happy birthday to you, Ashley. And nice to get some birthday wishes out there and birthday parties, and God love those Tarses. So what else is happening today on May 6th? Well, senators are discussing more stimulus. And it's kind of interesting now that they're back and they're meeting and they're talking about stimulus. And so we might touch on a little of that later on in the show, but we really need to talk about what's going on with EIDL and PPP. PPP is still open. We have news on EIDL. Restarting your business is getting closer. A lot of counties, the state is actually starting to allow this. And so what we're starting to see is that we're getting a lot closer to actually starting your business. Even if it's paused, or even if it's in a much less capacity, particularly those in the hospitality and travel, lodging, those particular areas associated with events, we know that have had a really, really tough time. It's coming up. So really what we're going to also remember today is that comfort, our employees' comfort and safety is really a key once we restart. And we could open up every business, at 4 o'clock today. But if our customers don't feel comfortable going there, what are they going to do? Probably stay home. And as May 6th is as May 5th, if your business has survived another day, that is a great thing. So a little bit about EIDL and EIDL Advance. As you will see, the EIDL portal, which last week was closed, is reopened again, but it is open only for agricultural businesses. So we're trying to figure out exactly if it's going to open up again for other type of businesses. You'll recall last week we discussed the need for, if your application started with a 2 or begin with a 3, you had different steps to take. Generally, the ones that I believe had a 2, they were, at least some of the people in SBA were instructing us to send you back to the portal and reapply. Now, I haven't heard anything new on that particular idea. I think it's still pertinent. If you had an application that began with a 2, I would put it in there, particularly with the strong poll numbers that we saw for those that actually were after March 30th. Now, March 30 usually associates numbers that actually begin with a 3 on your application or confirmation number. So if it actually starts with a 3, you are instructed just to sit tight. And I know it's painful, but again, let's just kind of look at the numbers and look what's out there. First of all, with EIDL 1, as I'm calling it now, EIDL 1, EIDL 2, PPP 1, and now PPP 2. So EIDL 1, which ran out of money a little while ago, probably, what was it, sometime last week, maybe earlier. Nearly $9 billion was out in that particular program. And with that, with the numbers that we saw last week, we saw that with EIDL having $9 billion out, 4 million people applied. 4 million. Of that, 750,000 got in. So less than, probably close to 20%. So there's a lot of backlog, and there's $60 billion to meet that added work in process. And it's a little complicated now that ag businesses are in. So, really, if you really are concerned, remember the one other key thing about EIDL is that if you have a PPP, your EIDL advance, if you only get the advance, will actually be rolled into an unforgiven portion. That is this guy's opinion. And I think we saw it in some of the PPP notes that we went through last week and others. So one thing that you really want to do is you really want to try to be patient. I know it's difficult because there is $60 billion that has been allocated, which is almost 7 times more than the first bunch. The one thing that is also unclear is that a lot of people really wanted to get the economic injury disaster loan, the 30-year loan, which is really kind of the blue chip piece of this disaster process. And that's the 30-year loan at 3.75. And we just cannot get information on how that is being determined, how much of that is going out, how much is going to go out for advances, how much is going to go long term. So we're all just going to have to remain a little bit patient. You can call SBA, there's your number, or you can email them. And when you email them, include you just want a status update on your application number. I've heard very mixed things on success at that. And, you know, your best call is to probably at an off hour, a remote hour in the middle of the night or whatever, call that 800 number. So it seems like we've had good success with people getting through on the phone. It's just the emails people were mentioning that were a little bit disappointment. So there you have it. There's your idle update for today. We have probably a much more extensive PPP update, and your PPP update today is, the good news is, as of earlier this morning, the portal is still open, and we'll kind of really celebrate our small lenders, our community lenders, our credit unions in our communities. Our other fintechs are actually now just cranking out deals. Hearing a lot of real positive things about these types of lenders. Our IRS rules as far as the PPP forgiveness portion came out with a ruling that it's taxable, or excuse me, not taxable. So the IRS came out last week and said the amount of forgiveness that you are entitled to is not taxable. Usually forgiveness of debt is a taxable item for the IRS, but the related payroll expense is not deductible. So that kind of has opened up a can of worms, of which is still kind of going on. It's still playing out. The Treasury and the IRS want it to be this way and remain, including the Treasury Secretary. But Congress has mentioned that this was not their intent, and they want the payroll expense to be deductible and create an added benefit for the businesses that got those. So stay tuned. We'll report on that more as news comes in. But again, the IRS is saying yes, it's not taxable, but the payroll expenses are not deductible. And Congress is saying, well, you fix it, or maybe we'll do that. So we'll see what happens. We're going to get into a little bit of PPP by the numbers. And PPP by the numbers, just a little bit of the statistical turnout of actually PPP2 by the numbers, and really see what our small lenders and banks are getting. And we'll talk a little bit about forgiveness. So let me jump in right now and actually pull up the PPP report. And here's what we're showing so far, is that loan approvals for this, for the second round, some of us like to call PPP2. And this information was as of approvals through last Friday, May 1st. And as of May 1st, last Friday, today's Wednesday, the 6th, 175 billion of the 310 billion that was reallocated has been spent. So don't know exactly where it is now. We know we're not at 310 because the portal's open. But so far, there have been over 2 million loans that have generated through May 1st. Most of these were individuals that were kind of backed up and had applied much earlier, and lenders had a huge backlog. The lenders have kind of gone through that backlog. That was reported to us from a representative from SBA on Monday, that the backlog appeared to be worked through. So that would have been the 4th. So all I can say is we got to be getting very low. And lender count is now up to 5,432. So there's been an incredible amount of small-based lenders and fintech companies that have really jumped up. Because please recall that there are only, going into this, approved SBA lenders that did your SBA 7A loans, your 504s, and your other type of lenders that did SBA products was only around 1,700. So a lot more lenders out there. And as you see here with the lender size of the banks, it's really those small lenders, those less than 10 billion in assets, that are really dominating this phase of the actual PPP2. Now, they are dominated in the number of lenders that are participating, but really they're pretty much tied with the bigger lenders as far as 139 lenders compared to 53 lenders on the amount of the deals that are being done and the dollars being allocated. So the big banks are getting in with bigger dollar amounts. The little banks are getting in with a lot of approved deals as well, with a lot of different institutions coming in. This PDF's a little bit tricky. So another thing is the loan size, and we're seeing far more come in at 50K and under. Our average size that, remember, on the first PPP one, I believe finished up around 206,000 for an average loan size, which average loan size is really can be distorted by the larger number of loans. When you start throwing a few of those 5 million plus, and you have 1,400 of those, it can really distort the average side. A medium loan amount would be probably a little better statistic, but average loan from the very smallest to the very tallest, 79,000. And also the top PPP lenders for the second round, it didn't actually show the banks, but it's still kind of, it will come out and show the banks eventually. But it shows the approved loans and the dollar size, and you're seeing a lot of differences in the average approval size by lender. You see it down as far as number 8, that's down to 44,000, where they've done 44,000 as an average deal, and right below it is one where you're up to 213,000. So a lot of discrepancy in the size of clients that are getting in and getting their PPPs funded. It's pretty going. Our last slide that we'll share on this is California really is getting a much broader share than we are this time than we did with PPP1. The Midwest was really well represented at first, and there were some really small champion community banks that jumped in and really did some great work for their small business owners in those areas. And for some reason, you know, out west, we were a little bit slower and a little bit, our loans didn't get processed. I don't know exactly why. But it looks to be a lot different this time, with California having almost twice as many approved dollars than any other state. New York's coming in around 17 billion, but 33 billion plus so far for this first round of money. So that's a little bit of PPP by the numbers, and kind of shows you what's happening with this group of funds that are actually coming out. So one thing I did want to mention is that we're running this, I just really want to accentuate this point, is that the Treasury has came out with a couple of statements, and number one is they plan on auditing all applicants receiving over 2 million in PPP. Now, I don't think there are too many of you out there that are going to actually get a 2 million PPP, but there might be a few. And they're going to also audit other applicants as applicable. So be thinking about that as we start rolling out with these dollars and you start implementing this spending pattern that you're going to have with your PPP, that this needs to be done in a very organized and fashion that you can't expect an audit. The other thing is the Treasury has reminded people that PPP, whereas you don't have to do as normal SBA lending, and that has been basically proved that you've been turned down for other funding sources, you do still have to adhere to this statement, and that is the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Very important. You know, if you started in a business and it looked very uncertain, and, you know, maybe it's a nursery business that has really kind of thrived the last few weeks, or maybe a hardware store or other essential business that's open, it may make you want to look at this thing a little more carefully and moving forward to document that a little bit more. So a lot of you were interested in the PPP forgiveness. Again, we do not have the final rules, but, you know, we have enough to go on we're going to have to go on what we know right now. And that is, in your note, it states that 75% must be on payroll. Now, we've talked about what payroll consists of for that. It consists of the actual wages up to $100,000. It can consist of state taxes. It can consist of retirement. It can consist of a group medical policy. So those are all we know that are part of that 75%. And we know it gets tricky too, because last year, for those that have a lot of minimum wage employees, they were paid less. And that was when really the sample was taken from. We know that rents and utilities and mortgage interest can be the remaining 25%. And we talked about idle advance not being forgiven. So the one thing that we're really recommending, and we're really trying to have a lot of our clients that have worked with us, is to stay with us and even contact your consultant you're working with. Really, the financial audit trail on this is going to be, as this is starting to unfold, really important. If you look farther down, there's some suggestions by the AICPA, which I believe is the Association of International CPAs. And they had 4 really nice suggestions on debt forgiveness, of which I'll give you the other 3 later, but one of them was actually starting the PPP forgiveness at the beginning of a pay period. Many people, as you know, when you receive the PPP as it stands right now, it's really when that distribution comes from your lender. Some are interpreting that as when it goes into your bank account. But it's pretty much that withdrawal from your lender. If it was an electronic transfer, it's pretty much going to be that same day. So that starts the clock. And that is starting the clock on a lot of people that could be right in the middle of your payroll. So you're really having to try to figure out and allocate in between payrolls, and it's going to make it difficult, particularly since we don't even know if this is going to be deductible at this point. So that is one of their suggestions, but really keeping a detailed audit trail, we think, by having a fixed date, fixed start and end date, and going through the process of detailing everything and keeping a very specific ledger of how these funds are spent. Please recall that at the very end of your 60-day period, you're able to approach your lender for debt forgiveness. So if you're approaching your lender for debt forgiveness after a 60-day period, I have a feeling there's going to be millions of other borrowers doing the same thing. I have spoke to a couple of lenders this week, and I wanted to ask that question. I go, gosh, you guys did an incredible job of getting so many of these loans out. And they did. Many of them worked weekends, the first several weekends of when this program came out, to get as many as their clients through the eTrans portal. But on the other side of things, this whole thing, I'm under the impression that about 99% of people who got a PPP want debt forgiveness. And I would say 100%, but I'm sure there's one person out there that really doesn't care. So let's say 99% plus want this. Everybody at the end of their 60-day period is going to be approaching their lender, and the lender makes the call on the debt forgiveness. Lenders are going to be incredibly backed up again. They're going to be incredibly busy going through this process, not only for your protection by providing a nice audit trail with a fixed start date and an ending date and detailing the records and having the records very specific, providing that to your lender gives you the greatest opportunity of having the most part forgiven. We all know the paper that moves the fastest is the one that takes the less effort. And in this case, the better you can describe exactly what you're doing and showing as far as your payroll is going to be very important. and also your other costs as far as the rent, utilities, and mortgage interest if applicable. Another thing is that self-employed, there's some rules out on self-employed, and I know we have some questions on that. And I've talked to quite a few clients who might have a couple of employees, and they're wondering about themselves, if they can pay themselves. And, you know, I always mean to go back and try to reread that particular section. I'm under the impression you can. I would reread the laws and regulations. And if you're self-employed, and if you have employees or you don't have employees, what I would do, if you traditionally have paid yourself when you have money, when funds are available, through a draw, maybe every quarter or every month that you have left over, no matter how you do it, whatever worked for you worked great. But I'm saying during this 60-day period, what you need to do is, if you have employees and you write them a check, write yourself your check at that same time. Calculate to the penny to what you're entitled and write that check for the best security, at least for your peace of mind moving forward. Okay. Mentioned the one AICPA suggestion. The other two that I like equally as well, or other three, one of them has to do with changing the 60-day pattern, the 60-day payment open window, to when actually that state is open and that business is able to open for business in their particular state. So again, that is not when you actually receive the payment, but when you're actually legally able to open your business. And I think that's a great suggestion, but I think it just needs to be either or, because we already have clients. I know I have a client that's already 3 weeks into his PPP loan and has already made his decisions on what he's going to do. So you're going to have both of those situations, but by offering that flexibility, especially to you people that are getting in under PPP2, would be enormously beneficial. I'm telling you right now, I could be wrong, and I better not be, but I'm thinking that the first week in July is going to probably be better for your business than the first week of May. Okay, not all businesses. I know some businesses are doing well right now, and you're probably working and not on this particular webinar, but in most cases, that's going to be it. One of the other rules on the AICPA, before I move on, had to do with kind of unusual hours, maybe it's salaries or piecemeal work, and just by being able to better describe and better detail what an FTE is, because we have been using full-time equivalents, and we don't know, is a full-time equivalent of 32 hours, is it a typical 40-hour, just working along those lines. One thing that we're not sure of, but with some of the remarks coming out of Congress this last week, with the Senate and House both gearing up again, is that maybe we haven't heard about the final rules because Congress is getting involved in writing those final rules. So very well, because they have really kind of not liked the way some of these unintended consequences have happened with the PPP. And there could be some final direction coming out of that. And that could be the reason that the SBA did not have final rules to Congress by April 26th as mandated in the CARES Act. Will there be a PPP3? There's been a little bit of rumor about a little bit of money more, a little bit more money. I wouldn't count on that happening right now, but there's been a little bit of discussion about maybe another 100 billion or so to try to help our smallest businesses that maybe still haven't got in. Again, the banks will be inundated at the end of the loan forgiveness period, and the most that you can do to help them is going to help all of us. And lastly, on our PPP forgiveness, unemployment clarification on forgiveness. And okay, there we go. There's the really wordy slide for this week. You might recall, those that were here last week, we had 4 or 5 slides in a row from the actual PPP note. And this actually is coming from, I'll share the source, and I appreciate Katie for sharing this with me. But the Treasury Department has updated the FAQs that have come out originally with the first final rules back on April 3rd. And they've continued every few days to add a couple of other questions. This one was particularly interesting because it deals with a lot of questions that you have had. And that's, will a borrower's PPP forgiveness amount, or what happens with that when actually the borrower is laid off, offered to rehire the same employee, and the employee declined the offer. So no, that will not affect your loan forgiveness. And the caveat there in bold and underlined is as long as you bring that employee back at the same salary or hourly wage and the same number of hours. And by the same number of hours, I'm anticipating they mean at least the same number of hours. So if they worked 30 hours before, they come back at 30 hours or possibly more. But it could also mean if you bring in somebody half-time and they don't want to come back, they're typically a half-time worker and they don't want to come back at full-time. So maybe I'll let you determine that one. So then also, the key here is that with the interim final rule, of which this will be part of, they have mentioned, the borrower must have made a good faith written offer of rehire. So if you have employees that are not coming back, you need to give them a written offer. And the employee's rejection of that offer must be documented by the borrower, email, a call, writing of some kind, I would assume. I wouldn't trust maybe a voicemail or possibly a text, but still that's documentation. And the employee and employer both should be aware that employees who reject offers of reemployment may forfeit eligibility for continued unemployment. So that is one major issue that came out over the weekend, and trying to alleviate a lot of the problems that we have heard about the bonus federal unemployment and some of the state unemployment, and individuals not wanting to return to work because they make far more money on unemployment. Okay. And you can find that and other PPPs at the Treasury site. And you can just go to treasury.gov and go to the PPP program and look for their frequently asked questions. And what they do is they continue to update that on a regular basis. And regular, I mean like every few days. Sometimes it's relevant for us and sometimes it's not. So, special guest today. Hey, it's my distinct pleasure to introduce our special guest today. And our special guest is Jennifer Bravo. And she's the president for Advantage HR Services. Her 20 years of organizational HR and outsourced consulting experience uniquely qualifies her to customize solutions for your business and many others as well. Expertise of knowing and building knowledge and confident internal HR staff, management teams, and business owners provides expert guidance to effectively address employment matters. Jennifer is a Bakersfield resident. She's a mom, volunteers in the community, and a U.S. Navy veteran, and soon to be our newest HR consultant at the Sbdc officially. Jennifer, welcome. It's great to have you here. Thank you for joining us today.
Thank you, Kelly. There's a little delay on the video, but I think you're finished now. Thanks for having me on today's presentation. I'm just going to speak a little bit about reopening the business and focusing on some of the safety and health issues that you may want to consider in as far as building a pandemic disaster plan. So let me share my screen with you. And so I put this together as part of a larger presentation as far as some tips and tricks on what to consider when you are planning to reopen the business. And, you know, when we're thinking about updating safety and health policies, you know, that we're already in for a lot of work, as Kelly was talking about, you know, making sure that all of the accounting and everything is up to standard for the loans that everybody's receiving. But as we're starting to introduce the public and our employees back into the workplace, there are a number of things that we want to make sure that we are prepared for, because the threat and risk of COVID-19 or any other types of influenza or illnesses, they're not done with, with the public right now. So to that end, some of the ideas that I wanted to share with you today revolve around the safety and health policies, your IIPP manuals, your injury and illness prevention manuals. And for small employers, you don't necessarily have a whole lot of resources dedicated to making sure that this is a living document and maybe updated as often as it should be. But here are some ideas that can help you, at least in this regard, get a few other hooks in it so that you have a better handle. And the first one I wanted to talk about was, number one, utilizing some of the free resources that are out there, whether they're online government websites or whether they're local safety experts. Feel free to contact them and have an expert walk you through some of these details that will benefit your company and be very specific to what your industry is requiring. I would also like to offer the advice of your workers' compensation insurance carrier. Typically, they will have a lot of policies that are already in place that may be specific, in this case, to how to handle the COVID-19 exposure. So it's a free resource, and I fully recommend that you go there first, and then also look at the online resources through either Cal OSHA or regular OSHA, and to know what your responsibilities are and what your shared responsibilities are with the employee. So what does that mean? That means, do they have a responsibility to let you know if they're sick before they come in? During this time, you can make sure that that is a requirement. If they feel sick, have your absenteeism policies reflect, how do they call out? How do you plan for that as far as getting somebody else to come in and fill in their position if that's necessary? So, Cal OSHA, the standards for Cal OSHA under the general duty clause basically say that it's the employer's responsibility to provide a safe and healthful work environment for all of their employees. And so as we're still in this season of uncertainty when it comes to, risks and exposure to the COVID-19, we want to make sure that we can, to the best of our ability, find the resources that are available and apply those guidelines into our practices. Another area that I feel is necessary for you to consider for a pandemic preparedness plan is how you're going to implement the recognition of different hazards and exposure. So it kind of goes back to what I was saying on the employee responsibility. Are you putting most of that responsibility on the employee? What other safeguards are you engineering as far as controls in that environment? And then looking at this workplace safety controls, part of the general duty clause is making sure that our employees have the proper personal protective equipment, or PPE, available to them. And in this case, we're looking at making sure that you have, the appropriate concentration of hand sanitizers and, disinfectant wipes and tissues and paper towels, things that we can use on a supply basis, having a stockpile of supplies in the office to make sure that those who are experiencing some flu-like symptoms will utilize those tools and prevent spread from themselves onto others. Number 5 on this slide is looking at identifying and isolating. So once you've identified that one of your employees may be at risk, there's a certain level of responsibility that you have to engage with that employee and, mention your policies that you have put together. You may even consider sending them to an Occ Health provider to get a COVID-19 test. Of course, that would be at your expense. You would pay for the employee's time, but this is one step to make sure that you're doing all of your due diligence to make sure that you're providing the safe and healthful work environment. And so there's ways, and then you enter into the workers' comp field of, is this a reportable illness? Is it, how is it going to affect my workers' comp? But your main priority is to make sure that your workplace is being at a low risk as possible. And then, when we're providing PPE to employees, when we're giving them new ways of doing things, we want to make sure that we're training them on how to do that properly, how to don their PPE properly, if it's a face mask or if it's a face shield. You want to make sure that you have documented training that you provide this information to the employees, because if something happens on the long run, you can always look back and say, well, this employee did have, we provided this information to the employee and they were aware, and so forth and so on. So that covers this slide. I did also want to share some of the online resources that are available. And this is specifically from OSHA.gov. And here they're looking at who's at the greatest risk. So some of the questions that I've heard come through this time is, do I have to hire everybody back? What if somebody's, sick, or what if they're at high risk? What are my obligations for that? Well, I feel that when you're knowledgeable, and you can really address your employees' concerns and put them at ease. And so knowing, whether or not your business is at a low risk or a high risk is probably the first step. And I wanted to make sure also that you see that here there's a lot of resources available to developing a disaster plan. And it's really, it kind of hits on all of the items that we discussed on the other slide, but it can go into more detail. And then there's a lot of, there's a lot of state-specific resources here on California's website, dir.ca.gov, that help touch on the different industries as well. So I just wanted to point those out. Here at the bottom, you can see that they have educational materials. So if this is something that you can post in your workplace, and it's just another educational tool that you can provide to your employees to help kind of show them that you're knowledgeable, that you're in control as much as possible, and that they can trust you to make the right decisions for them and their health while they're in your workplace. So here's another example of Cal OSHA's guide to that's available on their website. It's open to the public. So from an HR perspective, if something's available to employees, it's definitely nice to know what's being told to them so that you can be as knowledgeable, if not more knowledgeable, in how you're going to apply that into your workplace. So I don't know if there are any questions about that, but
yeah, if you have questions, do hit the question and answer box, and we'll take questions in just a little bit. So if you have questions for Jennifer, you have questions, I see some in the chat box, I see some in the Q&A. And plus you sent me plenty of them in advance, so we're gonna try to hit all those in about 5 minutes. So if you have another question, keep those coming. And thank you, Jennifer, and thank you for sitting tight while we actually prepare for the Q&A session. So, you know, we started a little thing here called Great Things Your Business Can Do with Too Many Employees. And of course, the fundamental task behind that, or part behind that, was that we realized in order to utilize, as a strategic point, to utilize that 25% for rent and utility, that we needed to exceed and hit our 75% level on payroll. And some of the earlier calculations we did in earlier webinars showed us that that was bringing back about 90 to 95% of your people without, you know, factoring in the minimum wage increase and other factors, increased pay and other things. So we had some really good suggestions, you know, do all these things that hopefully we've been implementing a little bit and will continue to do. These were all from last week, except for paint. And now look, we've got paint now too. Look at this. There is a typical San Joaquin Valley alley scene back of a business. And there's what it looks like with a little bit of PPP money going its way. So keep the photos and suggestions and everything coming. We welcome those, and we welcome trying to figure out more ways to utilize our employees to get the biggest bang for the buck whenever it's feasible. I mean, it adds a nice touch to the back of a particular building that people do see at times, so important. Okay, so just quickly, let's hit a few things and then let's get to the questions. You know, when the PPP is over and done with, we're going to be addressing probably more funding and looking at more funding sources. There are going to be programs available and coming soon, and actually already happening throughout communities throughout the area, tend to be nonprofit lenders, CDFIs, and also localities, being local government. And they're actually, some of them are actually receiving COVID-19 funds to assist their local small businesses. So programs are rolling out, or they're going to be rolling out. So be looking for those, but also look at your CDFIs, your small nonprofit lenders that are actually, many of which sat out this particular PPP round, but have been working to accumulate funds to assist businesses coming down the road. So those are some of the dead ideas. Equity-wise, pre-sales by using a crowdfunding campaign to kind of generate business once you open again. And a lot of the things that you can do, even sell part of your business on crowdfunding through equity crowdfunding. Most of us are more commonly familiar with the donation and rewards, but a lot of other things we can do as well. Never underestimate the aspect and the marketing benefits that you get from a crowdfunding campaign. Strategic partnering, very, very simple, can be very, very simple transaction, particularly if you are a key relationship with a vendor or customer. If you actually sell half of somebody's inventory of anything, you are a key individual, and maybe there's a funding relationship that could happen out of that. The more traditional types of equity arrangements, everything from private equity to angel investors and friends and family and owner carrybacks. I think when this kind of blows through, we're going to see a few people with exit strategies of selling their business, and we'll talk about that in subsequent webinars. As we've mentioned the last few weeks, we're continuing. The state did open up their unemployment assistance site for self-employed independent contractors. So that is now open. I hear it's very difficult to get through. You might want to try off-peak hours again, wake up in the middle of the night and do things like that. Our priorities have changed, but I want to take your questions. So look at those priorities, and really it's kind of getting open and generating cash flow in the business and coming up with that restart plan. As we continue to work through the next few weeks, we're going to continue to manage the PPP, particularly those of you that get idle disaster loans beyond the advances. That will need to be managed as well, as detailed accounting is needed to do that. This is a great opportunity for you to reconnect with your SBDC consultant and work with them on some of these strategies as far as marketing and social media, HR, etc. So there's our look ahead. We're really starting to see that middle one, the rural destinations over urban, and we're really starting to see a lot of campaigns starting to come out from not only rural states, but rural communities that really see the benefit of a post-lockdown on their particular communities, as people really want to experience rural isolation, and isolation perhaps in the outdoors rather than isolation in the confines of your 8x12 room you could be in right now. So next week we'll be back. We'll be back with another one. As I said, we'll be back the remainder of the month, and who knows for how long. Every Wednesday until everybody's back to work and going, and then you can still join us because we're at 12 noon. Grab your sandwich and join us. We're always going to have an interesting topic. We'll get into some more guest speakers, into some more presentations beyond just the PPP and the idle. So joining us next week, there is a little bit of the assistance part of things. And now let's actually start looking into some of your questions that you have. And I'm going to start with a couple of questions that I received via email beforehand. And this week I actually did have everything organized and I'm all ready. The first is from Carol, and it has to do with a question I couldn't answer yesterday during our regional consultant professional development meeting with 75 of our greatest consultants in the Central California region. And that is, how is the PPP applied for those that earn over $100,000 in salary? And we're talking about the loan forgiveness portion. And whereas we don't have final rules, and mine's just going to be my best guess, and Carol, I see you've had others that have offered you conflicting suggestions. My interpretation of this would be to use our self-employment example that we used earlier, where when you set up and you applied for the idle, a self-employed person gave their Schedule C and actually was able to actually, based on their income, generate 8 weeks of pay from that. I would think something would be similar to this up to the 100,000. I think it's Congress's intent to pay essentially the 8 weeks of pay for those individuals up to 100,000, but that is just my interpretation. And as you heard, I've advised self-employed individuals to do that as well. So something we really haven't touched on in the past. Next question was the tax ramifications that we talked about. It's fluid, it's in process. But right now, I'm worried about businesses surviving and worrying about the taxes coming due later. I think that there's not going to be a lot of businesses that were shut down over these last 6 weeks to 2 months that are going to show as much profit, as much taxable income as they have in the past. So we'll see about that as it comes down. You heard the intent of Congress and you've heard what the IRS is saying. Okay, this is interesting, Chris, as well, because you have one of those PPP loans that actually started on May 3rd. You pay your employees the 15th and the end of every month, which allows for 3 periods. I think that there's a couple of ways that you could do this. The intent is that 60-day period, even if you have to allocate, maybe the May 1st and May 2nd and begin on May 3rd through the 15th, and then go to the end of the 60-day period, regardless of they've actually worked the 60 days that they have officially worked, rather than if they received that check during that period. Again, Those could be in the final rules, but again, I believe if you just stick with the intent of the program and the intent of Congress, and that is, I believe, to continue to have that 60-day period open in that fashion. Next question is from Ed, and Ed asks if I accept a PPP or EIDL loan, will I have to forfeit my current unemployment benefits through EDD? And good question, Ed. I would think that definitely with the PPP, you would have to, because essentially what you're doing is you're receiving through PPP actually income or wage replacement, which is similar to what the UI benefits are. So I would think definitely by doing that. And your follow-up to that was, is there a way that you could postpone the start of your PPP? Boy, that's a tough one. I don't really see it. I see it as really the safest way. I can tell you the safest way and what you want to do, and that is applying it equally over that 60-day period. Absence of final rules, you heard what we said about UI benefits today, about you bringing employees back. So it is something that they are looking at and they are scrutinizing. That's one I'm not going to touch. Next question is, I applied for an EIDL on March 30th. And you were in that big group on the poll. I remember the poll. And you've received an email from EIDL saying they'll be processed in the order they received. You've heard they're out of money, but they were out of the original money of $9 billion. Receiving an email is a good sign, I believe. The fact that it's open now, but I think whereas if you're looking to receive the EIDL or the EIDL advance, it kind of depends. I would think that you are in line to get a better chance to receive the EIDL advance after March 30th, which is the $1,000 for each employee up to 10,000. That is forgiven if you don't have a PPP and not forgiven if you have the PPP. Okay, Judith, I hope that answered your question. Moving right along. Okay, self-employed, work at home with no employees. My loan is now funded. Excellent. I hope, Joan, you saw the example earlier. What I would do again is with self-employed, work at home, no employees, and you have a funded PPP, is the intent is to pay for 60 days of what your earnings would have been. So whatever you've missed out on earnings. Being self-employed, you likely file a Schedule C on your tax return. So again, I would use the original calculation that you used times the 2.5 and apply that. You can be safe by applying 2 months of that, because essentially by applying the 2.5 is a little bit higher. But I think either way, I think you'll be okay. And again, until final rules, but that's what I would do. Okay. Mary has a question on some employees filed for their UI and are receiving checks. Can we use some of the money to pay them for the time in between their last paycheck and their first UI check? I would think that you could, if it's within the 8-week period that starts with when you receive the funds. I think that would be the real drawback, the real question there. So I would think that that would be it. But my interpretation of that would be if it's during that period from their last paycheck to the time they receive their UI first check, then that would be permissible. Is it possible to give employees a hazard raise when they come back to help disperse the PPP funds? I would think if they worked in a hazardous environment, I think that would be allowable. There's no rules or final rules to increases in pay. I think, again, it comes back to reasonable. And it comes back to the intent of Congress is to reasonably bring back employees. I think as long as you follow that particular guideline, and you should be okay. Last prepaid question has to do with, I think, something that we've answered, and it's again on the sole proprietorship. So got that one too. Okay, let's hit your questions. And I know Jennifer standing by, anxiously waiting for a question. So let's go to the Q&A box right now. And here we go. Can somebody use PPP money for any expenses not expecting forgiveness? And I believe the answer to that is yes. It just needs to follow the uses that is in the note that they sign. And those uses are pretty similar to the ones in PPP. So I would think if you're thinking about using it for working capital or beyond the intent, I would think probably it would be okay. But again, you're signing a note that has basically the uses defined for you in that particular note. The website is shown is for ag businesses only. Yes, that's the EIDL disaster loan website. So that is true. It is showing for ag businesses only. And again, if you have a one that you did that has a number 2, they were suggesting we go back in. I don't know if they're allowing you to go back in at this time. I haven't heard. This webinar will be on demand later, and a link will be emailed to attendees. So do we have to have a written rejection letter from the employee who doesn't want to come back to work? What if they refuse to sign it? You know, I think an email transaction generally would be fine, where you're making an offer to them, and and you're prompted to get that particular email. So if they refuse to sign it, I wouldn't expect for you to have them to have it signed. I just would think the key words for that for me were a good faith effort. And a good faith effort is actually sending an email, offering them employment back, and giving them a timeline in order to reply. Okay, so follow up on the paint. Are there any issues with giving employees work outside of their normal scope of work? It sounds more like a Jennifer question, doesn't it? Up on the paint, are there any issues about giving employees work? I don't really think so. I think on the painting side of the building, I think as long as they're employed to benefit the particular business. So I think if if they're mowing your lawn, they're employed and they're doing something, hopefully it's the lawn at the place of work, the employment. So I would think that'd be fine. I think using employees outside of their main scope of work would be fine. But then again, I'm not an HR specialist.
Well, I think you discussed it last week in your presentation, Kelly, where maybe you wanted to, put an employee to work at a charity, like a food bank or some other kind of outreach into the community during this time. And I think the discussion was that was okay as well.
Great. Next question. A good question too, anonymous attendee. I qualified and received UI payments. My PPP approved has landed in my bank account. My UI payments will be greater than the PPP I received. Should I just return the PPP? Well, if it was me, that's what I would do. If you have a greater utility from the unemployment insurance and you don't have the concern of your employer turning you in and saying, gee, this person is able and ready to work and they're on unemployment and they didn't take the job, to where your unemployment insurance could get cut off. So if you are a business owner, and you must be because you got a PPP, I would take the UI if it was me. I would take the greater of the two sums, which give you a better chance of surviving in your business. But just make sure you do return the PPP. Does phone qualify for utility in a PPP? I would think a phone is a utility. Are union dues and fringe benefits eligible for PPP forgiveness? Fringe benefits definitely are. We mentioned a few of those earlier. as far as health insurance, state taxes through state disability insurance, state unemployment insurance. Also, there's certain other taxes as far as you can even get into strange stuff like housing, retirement. But so definitely fringe benefits. Certain fringe benefits are. Union dues, I have not heard. I do not believe they are. Okay. What happens if final rules are not out and your 8 weeks has run on your PPP loan? I ask this because I would like to pay back any funds not forgiven immediately. My advice there, Carol, would be to actually, you got to go back to what Congress has said and what they've mentioned. And I think what the Treasury wrote in their notes is that the information that you base, as long as the information that you base it on is the information you have at that time, then essentially you should be okay. Somewhere out there in treasury.gov land, it says that. It says that you can't be really held accountable for the final rules, even though they will be the final rules and you will be accountable for them. But as long as I think as you document everything and it really shows your intent behind it, your intent based on the rules, you're citing either the FAQs or the CARES Act, I would just document. And then you will know what is not going to be forgiven because the bank generally makes that call on the way back up to the SBA. Now, once the SBA gets it, and they're going to be getting millions and millions of these, we'll see what happens from there. Is the EIDL advance forgivable? And that is no if you've received a PPP. And if you have not received a PPP, it's our belief that that will turn into a grant. One of the main reasons behind that is not only what's in the note, but a lot of SBA officials were saying they initially called the advance a grant. And then they went away from that and started calling it the EIDL advance because right out of the get-go, it was called the EIDL grant. So then it was changed to advance, and then that really validates the reasoning from going to the EIDL advance portion because it's not a grant if you have to pay it back under the PPP. So again, if you have a PPP, my belief, not forgivable. I see I did a bad job of getting you out on time. That was really one of my goals when I sat down today, but I'm going to answer some more questions. What is the difference between EIDL loan or advance and the PPP? Well, the EIDL loan is the long-term 30-year, 3.75% interest rate, generally a much more substantial amount. And the EIDL advance is a $10,000 advance that they provide to you. The PPP is, of course, the loan where 75% of those funds, if you want it to be forgiven, needs to go to employees. As a self-employed individual, no employees, can I pay my own healthcare premiums with my PPP money? Good question. Really good question. I would think as a self-employed individual, most of those expenses, maybe even up to 100%, could even come from your so-called salary, even though you might traditionally draw. But it does say healthcare premium is allowed as a PPP calculation. So absence of final rules, my interpretation of that would be yes. Who decides that we have complied with the rules, the bank or the SBA? I would say both. So is the final decision, is it from the SBA, even though our bank said it is waived? I would say the final decision would be from the SBA. Well, in the PPP, you know, you got to remember, let's go back a step here. You got to remember that a PPP loan is a actual guaranteed loan. So it is guaranteed by the federal government, but made by the bank. The bank is always interested in keeping that 100% guarantee for this program intact. So unless you were one of the fortunate people on an SBA audit, and then they determined afterwards that, and you know, I think really to get into that, you're getting into close to fraud, something that doesn't resemble maybe haphazard accounting or record keeping, but I think just kind of keeping into that is where you go. Gee, I really thought you'd ask me, or excuse me, ask more questions on the startup that's coming, but okay. 1:16 p.m. It's time to wrap. Sorry, there were a couple more questions I didn't get to, and I didn't quite hit the chat box with the questions. I'll try to answer those individually. So let's move on and let's get out of here. So like to thank our special guest, Jennifer Bravo, and again, wish her daughter a very happy 16th birthday, quarantined at home. Must be great, sweet 16 party. I remember my sweet 16 party. Oh wait, I didn't have one, but I wasn't quarantined. And so happy birthday to her. Thank you all for attending today. We'll be back next Wednesday. For Jennifer Bravo, I'm Kelly Bearden. Have a great day. See you next time. Bye-bye now.